Good morning, ladies and gentlemen. Welcome to the Northern VCT Digital Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company will be most grateful. And I'd now like to hand over to Head of Sales and Investor Relations, Paul Mattick. Good morning, sir.
Good morning to you, and thank you very much, everyone, for attending today. As you will know, this is the third digital forum for Northern VCTs, which joined the part of the MERCIA group back in 2019. So, as I say, I'm Paul Mattick, and I head up the sales and investor relations for MERCIA, including Northern VCTs. So today's agenda is quite varied, and we'll have a number of different case studies from Alex and Adam, and Peter Dines will be talking about building a portfolio for the Northern VCTs and cover some of the recent exits from the VCTs. But just as a high-level summary of Northern VCTs, so it joined the MERCIA Asset Management Group in 2019, December 2019, and subsequent to that, we've been operating and investing across the country, investing in some great regional companies. And the group's deploying, I think it's £165 million into companies in the last tax year. And as you'll see from subsequently, around 30% of that, 35% of that came from the Northern VCTs. So on that note, I think I'll introduce Peter Dines. So if you bring up Peter Dines, and he'll walk you through various different parts of the deployment over the last few years. So Peter, over to you.
Thanks, Paul, and good afternoon, everybody. And as Paul said, it's my pleasure to speak with you today. And my role at MERCIA is to head up the Northern VCTs and in terms of the team that we operate. And as can be seen here on this slide, the last 2 years have been a very successful year as we continue to execute our strategy of building the portfolio of companies. And our strategy is to build a diversified portfolio that's both from a sector diversification perspective, a stage diversification, and also the profile of companies across the whole of the UK. So as can be seen here, the last 2 years have been particularly strong, with 45 million and last year 49 million being deployed in both new companies and follow-on companies as we continue to support the portfolio. And also the final graph is it's how we've been doing this year as well with a new investment in a company called Camina, a life sciences company. So here's a high-level summary of the new companies that have joined our portfolio. And it really is a range of both life science companies where we've been actively increasing our exposure because we've built out the expertise within the investment team with a focus around health tech and life sciences, and a number of software platforms as well. And also the third area where we focus on is consumer, although with the current headwinds, we have been cautious in that regard. But certainly software and life sciences, we continue to be active. So Camina, as I mentioned, is our most recent company to join the portfolio. And they are developing complex DNA products that sell to pharma companies. Centuro Global is a software platform that helps support companies develop internationally and grow internationally. Send is an insurtech platform business. And LMC, or Log My Care, is a care and domiciliary software platform. So you can see a wide range of different new investments across both health tech and software companies. I'd now like to pass to a colleague of mine, Alex, who works in the investment team, just to give a bit more of a detail around Turbine, which is also one of the new investments. You can pass to Alex.
Yeah, hi, Alex. If you just turn on your camera at the top of the screen, that'd be great. For some reason, it's not permitting me. Just give me 1 second. Just give me 1 second, Peter, and we'll bring Alex back into the room. Go ahead, Alex. The floor is yours, sir. Thank you.
Hi, everybody. Sorry about that. So Turbine is a company using AI to support drug discovery and development. They've built a cancer cell simulation model that can uncover novel cancer treatments and identify specific patient groups. They are partnering with several large pharma companies to progress cancer treatments towards the clinic. So we invested in them back in September 2022. We invested 4.5 million as part of a 17 million pound round, alongside funds such as Accel, Delin, XTX, and Merck's Venture Fund. This round was extended recently with an additional 5 million from Mass Mutual Ventures. We liked this opportunity because it is tackling a significant challenge in a major market. The average cost of taking a drug to market is $2 billion over 15 years. Turbine can help reduce that cost and accelerate the process. They have strong IP that they have developed over a number of years. Turbine have one of the few AI models that can explain the why to their answers and not just the what. This makes a big difference to researchers actually trusting in Turbine's results to progress their drugs. And finally, we're joining a strong syndicate of highly respected investors. This includes the venture arm of Merck, the global pharmaceutical company, whose investment comes with a pilot study for Merck and Turbine scientists to collaborate on. Since our investment, we focused heavily on helping the company form a strong board to steer its growth. We're pleased to say Turbine have now pulled together one of the highest profile boards we've seen. It features deeply experienced experts from the world of AI and pharma who can both advise the company and open doors to important contacts. The team is now working towards signing more large-scale drug discovery partnerships, as well as progressing several of their own assets in their pipeline. We look forward to helping Turbine continue to grow and bring these new cancer treatments to market. Now, I'd like to pass over to my colleague Adam to talk through his case study.
Great, thank you, Alex, and pleased to be here speaking with you all this afternoon. So with Social Value Portal, I'll just run through some background on what the company does, why we back the business, and what's happened post-investment. So the Northern VCTs invested 5 million into Social Value Portal at the end of February. This formed part of a wider 6.5 million round alongside MERCIA's wider EIS funds. So the whole round was funded by MERCIA. It's a good example of our connected capital model in play. Writing a larger check was important to winning the deal. So a good example of how we work with other MERCIA funds. SVP are an ESG software business, helping public and private sector businesses quantify, track and improve the S in ESG. They've developed a novel framework denoted the TOMS framework, which has become the trusted and market-leading social value measurement framework in the UK. The origin of the business is in the public sector. There are regulations in place which require businesses bidding for public sector work to quantify the social value they deliver on the bid. But in recent years, and what's encouraging, is the business has made strong inroads into a larger opportunity in the private sector, signing up some real blue chip customers such as Accenture, Fujitsu and Vodafone. So why we back the business? We looked at the broader ESG software market. The G segment is more mature, and interest and acceleration in the E has really accelerated over recent years, with carbon accounting firms attracting significant levels of funding. But the S has been relatively overlooked, but is now garnering much more attention. And SVP are benefiting from these market tailwinds, really showing strong growth since their Series A round with Berenjaya in 2020. The reason we think they're winning is because of the trust they've built around their framework and the fact it goes further than just measuring employee engagement and diversity and inclusion. True social impact goes further, includes capturing jobs and skills, volunteering, impact on local businesses and communities, and environmental regeneration. Another big attraction for us was the CEO and the management team. So the CEO, Guy Battle, is a real thought leader on social value, and was actually involved in shaping the Social Value Act back in 2012, following selling an ESG consulting business to Deloitte. Together with his co-founder, Nathan, they've built a fully formed management team across all functions of the business. So I've got a good foundation for scaling. And finally, what's happened post-investment? We're only a few months in, but we've really been focusing on helping the team with value creation activities. So firstly, we're working with the financial DD provider on the deal to help SVP improve the quality and depth of data it has in the business to provide the foundations for scaling. Secondly, we've engaged Edwin Abel, who's an operating partner at MERCIA, to do a deep dive into the sales and marketing function to identify some operational improvements. And thirdly, we've also engaged executive coaching across the whole of the management team to help support them on their scaling journey. And we're looking forward to working closely with the business as it scales. I'll hand back over to Peter. Thank you.
Thanks, Adam. Thanks, Alex. So as well as deployment and building the portfolio, it's important that we're continuing to, as Adam just mentioned there, create value and then ultimately exit businesses. And I'm pleased to say we've had another strong year of divestments, including Lineup, Ideagen, and Intechnica here. Intechnica actually was a planned divestment because it was a group of companies that we invested in with the consultancy arm Intechnica planned to be degrouped and then divested in a shorter period of time as to enable us to continue to back the other business, Netacea, in the cybersecurity space. Current Body was a partial divestment where they've continued to grow significantly, especially in the Chinese market. So we're a current holder as they continue to grow. And then last but not least, post the year-end period, Evotix was a very successful exit for us. It's a 35 million cash realization back to the Northern VCTs. And as mentioned, divestment continues to be important, both to recognize our track record as venture capital investors, as well as then generating cash that covers the dividend cover for shareholders. So we thought we'd share next just a short video to hear directly from the CEO of Evotix, Matthew.
I'm Matthew Elson. I'm the Chief Executive of Evotix. Evotix provides a health and safety software solution. So if you're responsible for health and safety, you need to record and investigate your incidents, follow through on any actions, you need to understand your risks and mitigations, people are trained, assets are inspected, contractors are competent, etc. Lots of customers in our target space still doing that with pen and paper and Excel spreadsheets. So we're providing them with a solution that helps them to capture, store, organize their information, simple workflows to maintain compliance, and powerful business intelligence in order to slice and dice their data and understand where their improvement opportunities lie. So we're a SaaS business, it's a multi-tenanted SaaS solution, everybody's on the same code base, and we're updating that code every couple of weeks. Having stabilized the business, we had some great years of bootstrap growth. We'd created additional growth opportunities that we knew we couldn't sensibly continue to fund from internal cash flows, in particular the North America market. We actually worked with an organization called Scale Up Group. We were lucky that Scale Up Group introduced us to some great investors and really enjoyed meeting with MERCIA and just felt there was a great alignment between us and MERCIA as to what it takes to grow a business at that stage in its life cycle. There's been a lot of consolidation in our industry, and so we always knew that at some stage we wanted to participate in that. EHS sits at an interesting intersection of different segments. So are we part of HR tech? Are we part of governance, risk and compliance? Right? Are we part of effective operations? So we knew we were going to need to talk to a lot of people. So we did all the prep, and then I think we had a total of 52 fireside chats, from whom we had 15 indicative offers, and then we shortlisted that to 4. SAI 360, relatively late to the game because they'd themselves only just been acquired, but I was delighted when they came onto the scene because the strategic fit for us was very, very good. It's an exciting market. We're the only player in our market who can cover everything from mid-market up through enterprise and have global presence. So we think we're in a great position versus our competitors, and we're excited about the opportunity to create a new safety or new EHS and S business, but combining the capabilities which exist within SAI 360 with Evotix's capabilities and creating a new independent company that's going to go after that opportunity.
So this slide gives a schematic of how our portfolio is split both from stage of companies. So shareholders will be aware of the patient capital review, which changed the VCT rules. And you can see post 2015, which is when that came into place, the majority of the portfolio is now made up of growth capital investments. And you can see by sector as well. Software is our largest exposure by sector, but as I mentioned earlier on, our healthcare biotech percentage has been steadily increasing as we've built out the expertise within the investment team in that area, where we do think that the UK is one of the strong points for the UK, and there are many opportunities in that area. And consumer being the third area, and as I mentioned earlier, we are cautious at the moment around consumer, considering some of the headwinds. During the last few years as well, since we've managed the Northern VCTs, we've continued to build out the team as well. So rather than just being based in London, our investment team are based around the UK. So I won't go through each individual, but you'll see we've got a team that's almost doubled in size compared to 3 years ago, and a number of different functions based in either our London, Bristol, Midlands, Manchester and Newcastle office. So we've got quite an extensive team now that's also, we've built out also our portfolio function. So Nigel and Martijn, who are mentioned here, they have a wealth of experience and have joined the team to manage the ever-increasing portfolio and as I've mentioned earlier, focus on that value creation and ultimately focus on exits and realizations. The other area we have under Lisa is the whole value add and the operating partners that Adam mentioned, and other areas of expertise that we just need to help and support the portfolio. So Lisa's sole role is to focus in that area and really just build the value of the portfolio as much as proactively as we can. I'll hand back to Paul now.
Great, thank you very much. And it's been really interesting hearing about some of the portfolio companies, both case studies and also directly from the CEO. Also trying to understand the kind of the increasing deployments over the last few years as that we build out the team, and you can see since the Northern VCTs joined the MERCIA group that the deployments expanded substantially. And that follows on to what we wanted to talk about at the end of this presentation today, and that in September we will be announcing, we'll be launching a £60 million offer, and that will be a £42 million across the 3 VCTs with the £18 million top up. As you'll know, the investments we're deploying and the realizations that we're making over the last few years is how we create the dividends. And the dividends have been very strong over the last few years. And you can see the quote from MJ Hudson showing dividend yield between 8.4 and 14.8%. And that's something which is very important to all our investors, I'm sure. And it's something which, with our realizations that we've had over the last few years, is well covered. But as I say, got this £60 million offer, which people are very welcome to investigate more when the offer comes out in mid-September. And then the application will be available in late September. As this timeline shows, the offer is open in September, but then after that there will be an interim share allotment in December, and that will be ahead of the interim dividend. And then we expect the offer to be open for a few months. It's a 60 million, so it's bigger than we've previously done, but it's also early in the year. As you'll understand, previously, most of our offers have been out in January, where we're bringing it forward to September and raising more. So we do expect the offer still to be open in January, February of 2024, but the final allotment will be just at the start of April in this tax year, in the 23-24 tax year, and after that's been allotted, then there'll be the final dividend paid in August 2024. I can see there's been a few questions submitted already, but please do feel free to submit some more questions, and then we'll if it's okay with you, we'll move on to the Q&A section of that now. So I can see that one of the first questions is from Michael asking, are there any sectors that we avoid, and what sectors do you feel the greatest upside at the moment? And I think that's probably a question for Peter. Feel free to bring in others.
Yeah, so as I mentioned earlier on, broadly we're focused on software, which can impact many sectors. Life sciences, which is also quite a broad church, and then consumer. There are three verticals that we tend to be focused on. What that probably doesn't include, and it's mainly around our team expertise, would be fintech. So I'd say that's an area that we tend not to invest. It's potentially got upside, but it's an area that we tend to focus on where we've got internal expertise and also external expertise within our networks. We do try and have an investment strategy that also offers diversification around upside as well, because because we are investing at the Series A stage, typically, that is still at the risky end. So whilst some opportunities may have significant upside, it may be, if it's binary technical risk, it's often an investment that will not progress with. So we do try and ensure that we're looking to make sure that we're mitigating risk as much as possible, recognizing that we are in venture capital.
Great, thank you, Peter. There's another question which I think probably sits with you, is what is your view of the broader market given the increasing number of headwinds across inflation, high interest rates, and how is the portfolio managing during these challenging times?
Yeah, I mean, it's certainly been an interesting few years for both our teams and also our portfolio, in that we've had COVID to deal with, we've had the Ukraine war to deal with, and now we've got the macroeconomic challenges. And I think on balance, it's fair to say the portfolio have handled all three well. We do sit on the boards of all companies that we invest in, and from a governance perspective and risk management perspective, each of the companies are assessing their own individual risks and trading fairly well in that regard. Most companies haven't got a huge amount of leverage and debt, so from an interest rate perspective, they're shielded. Inflation has been a challenge, and wage inflation has been a challenge for most companies, and certainly last year the energy crisis impacted certain portfolio companies quite significantly. But interestingly, the latest both risk and opportunity assessment we're doing is around AI and large language models, and the impact either positively or negatively across the portfolio. So that's a current area where the team are very focused to make sure that we are managing risk as much as possible.
Great, thank you, Peter. And I'll bring Adam in on this one. It's slightly different. What are the key attributes does an investee company need to display to win our investment? So if you want to take that, Adam.
Yeah, thanks, Paul. I think at the highest level, we look at the management team, we look at the market, and we look at the product or service. So to dig into those one by one, the team, given we're backing early stage companies, and we really are placing our trust and confidence in the management teams to deliver on their plan. They know their markets, and it's for them to get across the vision to us as to how they can win in this market and why they're differentiated against competitors in the space. So I think a good balance of pragmatism, but also confidence and ambition we're looking for in the management teams. In terms of the markets, we obviously want to invest in businesses that are in a growing market. But I think what's more interesting from my perspective is not necessarily the top line number of what the market size is. It's the direction of travel, and how differences in regulation or trends in consumer preferences or other market factors drive growth in the market and the way products and services are built. Bought. So if we look at Social Value Portal, for example, I discussed the sort of market tailwinds there. So really truly understanding the market they're operating in, and that it's a growing space, and the business we're looking at looks set to win in that space. And finally, on product and service, we are looking for differentiation, and that there will always be competitors in the space, and arguably if there are no competitors, you might be a little bit early in a sector. So really understanding how the company differentiates to its competitors, and that could be in the product or service, but it could also be in the go-to-market motion, for example, in the way that they engage with customers, to build out the case studies and build out trust and confidence. So those are the broad three areas that I would look at when assessing an opportunity.
Great, thank you. And I'll bring in Alex for this one. And can you talk about the valuations of new companies which we're looking at, and are our management teams being realistic? It's obviously a big question at this point in the cycle.
Yeah, good question. So I think on the whole, we've seen a correction on valuations, and people taking a slight pinch of salt when they're thinking about what they expect or ask their companies to be valued at. But interestingly, when there are still excellent companies that we find, they still do attract quite big multiples and quite high valuations. But certainly at the moment, it feels like we're seeing more sensible valuations in some rounds where the CEOs have appreciated, particularly if they raised in the year of 2021, that this round isn't going to be a big uplift. So yeah, it's a bit of managing expectations and working to a valuation that makes sense for both the founder and for us as investors, as always.
Great, thank you very much. And Peter, this is probably one for you. And can you tell me about the dividend policy that's come in from Steve? Thank you very much for the question. But can you just brief us on the overall dividend policy of the Northern VCTs?
Sure, yeah. So there are three VCTs, Northern, MVT, N2 and N3. So each have independent boards, but the MVT and N2 aim for a 5% dividend, and N3 aim for a 4.5% dividend. And then each board will then make separate decisions based on any special dividends that are disputed as well on a case-by-case basis.
Great. Okay, and I think that there are some other questions which, I think we'll take offline, but partly so in the interest of time. But Peter, I think I'm going to hand over to you at this point to give a summary of what we've been talking about during this session.
Yeah, no, thanks, Paul. And yeah, it's a pleasure to be running the Northern VCT team within MERCIA. As you've seen, we've been growing both the team and the portfolio, and continuing to have some successful realizations, which we're confident to keep maintaining. So yeah, look forward to speaking to shareholders, and existing and new again. We're also planning to have an in-person event in October for shareholders, which post-COVID we very much look forward to as well. So thank you very much, and look forward to speaking again soon.
That's great. Peter, Paul, Adam, Alex, thank you very much indeed for your time this afternoon and for updating investors. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the team from Northern VCT, we'd like to thank you for attending today's presentation. That now concludes today's session, and good afternoon to you all.
Thank you very much.